Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
What's up, everybody? It's Monday morning. Hey, happy Father's Day to all the fathers out there. Glad you could join us today for the daily market commentary. Hope you guys all had an absolutely amazing weekend as we're about to kick off what we do each and every day, looking at the same 10 to 12 futures markets, identifying potential breakouts and reversals from an educational perspective. For those of you new to the channel, do me a favor, click that subscribe button, alert the notification bell, do all that fun stuff in there so that you get alerts when they happen. So last week we had a couple of decent movements in some of our commodity plays, and we had our contract rollover. So coming into this week, we are a little bit sideways in price action before the FOMC announcement. So we were in a live trade room last night. A couple of the items we looked at from the live trade room last night, some of them met entry, some of them met entry and moved kind of the other way. So we'll kind of take a look at those. But knowing anytime we take entries in a Globex session, it's slightly lower probability overall. So let's start with the ES. Now the ES last night when we were looking at it, we were down just a few points. And we had talked about the fact that there could be a little breakout above here. Now, we were looking at it right around, I guess it would be right around here. And our thought was, if you're more aggressive, which my caveat was, I'm not all that more aggressive, you could have taken a little breakout above there. Now, it did break out, about 8 o'clock, 8:30. It got a little bit of a pop out to the upside here. And then pretty much sold off the whole rest of the evening. So we got a little bit of a pop-up out of here off the 15-minute chart. Didn't really do a whole lot on there, and so ultimately your 6-candle rule would come into play there anyway. But in all reality, now we've really started a decent sell-off. So what I do when I see this kind of a sell-off is I immediately go down and look for the 2 a.m. reversal. Where are we at? Around 2 a.m., right around that European market open. And what I can see is that's what really kind of started this last leg down. And when I go to the hourly chart, I'm going to look to see, is it clean on the hourly level? And it's not a super clean level. It's not a super clean area that I really want to necessarily lean on. But we certainly could be setting up for another leg down out of here as we're kind of popping back up. I wouldn't take it unless I get some sort of a candlestick reversal pattern and possibly even a breakdown pattern. In reality, this is just a lot of sideways price action, and you might just be forcing it. And that was kind of our theme last night, was we'd be forcing it. The NASDAQ as well, also a little bit of a move down overall. It did not get as high as the S&P. The S&P broke out above those highs. The Nasdaq was not able to do so. So the Nasdaq is actually a little bit weaker than the S&P in general. And so if you wanted to short one, you might be better off looking for a breakdown level. Now this could be the area that we break down from is this area here. So look to see a little bit later if we show some basing in here and then break down from that area. Looking at crude oil. In crude oil, we didn't come anywhere near our levels last night. And last night, the thing I was looking at was the fact that we had this kind of a price action with some slightly lower highs, slightly higher lows. And if you were so inclined, you could take the breakout on the triangle. And it actually just gave us a little bit of a breakout here very recently. But what I'm going to do is zoom in on that a little bit and look and see about the origin of some of these moves down. And very similar to what we see in the equities market is that we have, this almost looks identical to what we have in the equities market. We've got this set up right here. Now, if you decide to take this little short, your stop's probably going to want to be above this area here. You might even want to take just this wick over wick level right there. You kind of have both of them stacked on top of each other. That's where we could see a bit of a reversal. In gold, so in gold, we looked at this hourly level last night. We kind of popped just a little bit above it. Depending on how tight you put your stop, you certainly got to give yourself a little. This is not even this barely popped out. What is that? Less than a point above. So you got to give yourself at least a point's worth of wiggle room. But that one definitely moved away very, very nicely. And so now we did trade all the way to the top of it and popped a little bit through it. And so that level would no longer be valid. However, I think that we're setting on what could be another leg down for some sort of a breakdown. So if you miss that move down, you may get another breakdown opportunity below all of this, right? One touch, two touch. I'd want to see a third touch, a little bit of basing, and then a strong drop away. And once again, kind of like the crude oil level, you may get another opportunity here if I move to this 15-minute chart. Now, I think, by the way, that this 15-minute level up here is my cleanest level on the chart. That's the one that I have identified. But you may get a bite at the apple right in through here if you wanted to give this one a go. If you wanted to try this on a 15-minute chart, I mean, understand you've got a little bit, it's a little bit tighter. It's a 15-minute level, not as clean as the one up above it, but all of those are potentials for that move down. Now, if I look at this on a 4-hour chart, why would I be looking at this for a move down? Because ultimately we're still in an upward trend. We got higher swing highs. Yes, we do have higher swing highs, and so anything that's short is going to be a slightly lower degree of probability. But if we put in a higher swing high and a higher swing low, then we've changed our trend direction. And that's ultimately what we're looking for in here. Looking at our bond markets in the ZN. So in the ZN, we looked at this level last night as a potential for a reversal. We did not quite make it back up to there, and we're starting to see this thing kind of fall off through here. On the 4-hour chart, we can see that I'm still technically in an upward trend, but once again showing a lot of weakness and a little bit more momentum to the downside. And so I think this is going to wait on the FOMC announcement as well. So not a whole lot of movement I'm anticipating in there over the next day or two. But we put that level in there as a potential for a reversal. In the Aussie, we had looked at, if you were so inclined in the Aussie to try the candle-to-candle reversal style. But remember the rule on the candle-to-candle. We were looking at this last night, but you only get short when you have a candle with a lower low. And that didn't give me that lower low on a candlestick until here. So you didn't get a candlestick with a lower low until this one right in here. Now, if you want to go back and watch the archive of that, you can. Because we archived those, we archive all of our live trade rooms. But it's a good lesson to see. This was our candle that actually gave us our first lower low. So the way that those trade works is once you get your first lower low, that is your entrance. And so in that case, your stop goes above that candle's high, and then as we continue to put in new candlestick lows, you continue to move your stop down. Now, if indeed, my guess is most of you weren't awake all night to do this, but you still are in that trade. You have not yet been stopped out because there's not been a candle with a higher high yet. When we were looking at it in class last night during the live trade room, we were looking at this candlestick as a potential entrance, but we didn't get below there, and I didn't get any candle with a lower low until this one got lower than the prior candle. And so, your stop would continue to move down on each particular one, and we're getting about to where that target would be at that point. So if you want to know more about candle-to-candle trading, we actually have a underneath our trading courses at Traders Army. There is there's the free trading courses. There's one called Candle-to-Candle Trading underneath the free trading videos. I'll post a link to it in the comment section down below. But candle-to-candle trading is a great way to get in when you see some quality reversal candlesticks, and that would be kind of where you would look for that. Here's where it is on the site, by the way, underneath trading courses. It's underneath trading courses, free trading courses. It's titled Candle to Candle Trading. All right. So that's the Aussie position. Looking next at the euro. So our euro trade in the overnight hours hit, and then we got a nice little move away from there. So if you grabbed that one, leave a comment down below. It hit that little wick over wick area, got a nice little move away, about a 2-to-1, came down to our opposing level. So now that level's been hit. I'm actually going to remove it at this point. It's no longer going to be a valid level since we've already hit it once. And now I would be waiting for our next opportunity to get short, which would probably be on a breakdown below this area. Would be our next opportunity, provided that we base in front of that level. Canadian dollar, we were looking a little bit at the fact that there could be a breakdown below this line. We did not get the breakdown. I was looking at the fact that we were getting a bit lower. We didn't get the breakdown in the overnight hours, but it doesn't mean that the breakdown is dead. Matter of fact, the breakdown is still just fine, although our probabilities are not as strong since we've spent so much time here going sideways. So it kind of weakens it just a smidge. Looking at the Great British Pound and the Japanese yen, the pound did not come up to its reversal point as the euro did. The euro came up, hit the reversal. The pound did not come all the way up to its reversal point. When I look at this one on a 4-hour, now remember, this 4-hour does include the rollover gap. If I just looked at the contract specific, you wouldn't see that gap. And we would be looking at something like this, and our next leg down would probably be potentially a breakdown is the next best opportunity. And that's really what I'm looking at here is, what does it look like? But I'm looking at it on the with the rollover gap included. I can see this little reversal area in here. But the fact is that we didn't make it back up to there, and there's a little bit of basing in front. So I'm going to leave this reversal point in place, but we may see a breakdown from that region. Japanese yen, another one where we identified a reversal point, still need price to come up into that area. It's already started a bit of a breakdown, and so we'll see what that happens. I think overall we're going to see a fair amount of sideways price action over the next few days. I think that there's a tremendous amount of question as to what's going to happen with the next move overall in the FOMC. And so just trade your plan. The key is to trade your plan. From our last night's trade room, the gold trade, the euro trade, both worked out pretty well. The S&P, a little bit of a breakout that didn't come to fruition, but that was on that 15-minute chart. So all in all, a pretty good live trade room last evening. Hopefully some of those kind of carry over into today. If you've got any questions, please send us an email, support@tradersarmy.com. I will be back tomorrow with our live, with our daily market commentary. Hope you have a great day. See you.